Hi, Kevin. Good morning to you, Ziggy, Craig, everybody. How's everyone doing today? Good pre-NFP day to everyone. I have a few things I'd like to show you. Hi, James Cooper. Welcome to LAR. You're a new name to me. Everyone's welcome here. Only one rule is that we show respect for our guests and any members of the community that want to share their work. So, welcome to FACE. Did I say LAR? Oh boy. All right. I'm a little senile. You guys know I'm kind of an old guy. So here's Nick's look at Euro Yen. It's a shark. Hi, how are you, Ziggy? Hi, Jess. Ash. So it's a shark, has negative implications. Nick's harmonic work is pretty good. Now, she says it's a tough short here, okay? It's been a very difficult short, and there may be better short setups out there. Below 29.65 should see turn the momentum to the downside. Now, we all know the guppy has really been the preferred yen cross short. We talked about it way up there. Maybe it's the Euro's turn. So we need 29.65, which is where the 200 moving average is. In fact, maybe I was thinking of LAR because somebody that I taught the 3-drive, Tico, if you're in the house, Tico pointed my eye towards the 3-driver here. Everyone see this? Basically had 3 drives, 1, 2, 3, and within the 3 you had a little fractal here for 3. Failing rally right here. Maybe we get to what Nick described as an important zone, 29.80. So this looks pretty negative to me. It's talking about it to some trader friends of mine in here yesterday afternoon. Looks like it's rolling over to me. Give me a Y if you understand the analysis. So here's a 1 hour. Here's your 4. Pretty negative candle on the 4 here. And we may even get a reversal day, something that Steve Volge looks for by the end of the day. So we had a red candle here, and then we followed through with this. So the reversal day was actually yesterday. We'll see what happens down here if we could get down to 29.80. Everyone with me on that? Okay, early in the week we talked about the breakout in USD MEX. And this is pretty classic here. I don't think it's too late, although it's not as much on time. But we broke out of a falling wedge, which is a reversal formation. And then looks like we had some type of corrective move back to the breakout, plus confluence of 61.8. And we start getting through this near-term high here. And through this upper flag line, it's going to look pretty good. In fact, it looks good here. You'd have to get out of the way back under these lows, back under the 61.8 level that comes in at 17.28. Everyone with me on that one? Also, something that happened in the aftermarket. You have the makings of a 3-drive in the crude oil market, but, you know, I'm not impressed yet. You know, like I said, sometimes a 3rd drive, you get a fractal. So I'm going to hold off till next week and see if we get a couple more pushes down into the low 45s on that. Everyone with me on that one? I think that's really all that's on my radar screen right now. Gold is approaching a major breakout here, so we're going to see if it holds the 1300 level. So far, so good. This may have been it. So if this is turning, then we could look for the possibility of this rally in US dollar yen terminating as well, right? They're very closely correlated. Where are you, yen? There you are. So we're making new highs for the move, starting to diverge here. This is your 1 hour. This is your 4. May begin to roll over again, at least maybe back to 950. That would help the cause on the euro yen as well. And S&Ps are looking more and more like they want to make a new high. They better, if they're going to turn it, they have to turn it here pretty soon. Maybe that's what we're getting here. So it's definitely been levitating. This third drive, 3 drive formation down here never was validated. I thought that we might get down here for a cleaner buy, but I do remember saying, I think it was Monday, that in my gut I thought the S&Ps would rally, gold would come off, and the bonds would sell off. So we shall see. It's kind of in no man's land to me right now. This is all going to hinge on the NFP. So we either have to start failing here or we're going for the high. That's the way things look to me. Be careful, tread lightly. Yeah, that ended up working pretty good, didn't it? I mean, it wasn't easy to stay long because of all the trips in pound Aussie, right? You had trips, you had a few different round trips on that. You know, you had this big rally. We talked about this divergence last week, and then this was last Friday on the Fed, and then it came almost all the way back. But if you were disciplined, although 350 was a target when I talked about it here, but down here it was hard for me to want to buy it and put a stop under the low. But here you go. It's looking good. And in fact, Luca and then Steve had a discussion on pound Kiwi, and I believe it was the daily, and I believe we're getting a breakout here, right? So it looks like we're getting some type of breakout here. Luca liked it. Steve wanted confirmation. So kind of looks like that's happening here. I would call this a ascending triangle, kind of a flat top, 74 to 80. If this is a true breakout, could take us up to 86. Does that answer your question, Martin? Thank you, Martin. I have a few announcements. I mean, this is big. This is big. This is big. Blake has ordered the coolest FX t-shirts. I don't know, when he comes on, maybe he can show you a picture of it. And the one I want has FOMO on it, because my biggest problem in my career has been impulse trading. I'll walk in here and I'll see something and I'll do it. No pre-thought. You know, sometimes my trades were planned, but usually I'd walk in here and I recognize that. I think I'll do that. You know, kind of like off the cuff, give it a shot. I'll give this one a shot. You guys hear yourself saying that? Remember, we had an agreement you wouldn't do a trade unless you thought about it 24 hours in advance. And if you do that, you're going to see your performance skyrocket. So Blake has these t-shirts, and we're having a contest. So the contest is, where will the Euro USD close a week from tomorrow? And the way you enter and you win these t-shirts, I hope there's a FOMO left for me. And anyone that wins a FOMO shirt, you know, you don't wear it, you hang it up on the wall to remind yourself that it's okay to miss trades. I have this written down. It's okay to miss trades. I miss trades every day, but that's okay. There's always another. Take the pressure off yourself. Okay, so that's the first announcement. The way you enter it is to come up with your Euro USD closing price from a week from tomorrow. and you have till Tuesday to get your entries in. And how you're going to enter is by using ForexAnalytix Twitter. Yes, at the close. Okay, at the close, right, on Friday. I think Greg came up with GMT time. I forgot the exact time. So who knows ForexAnalytix Twitter handle? Anyone in here? You guys have to know it. All right, can you type it in the questions for everyone else? Craig, type it in the questions so everyone has it. All right, or Steve, it's at, Craig's got it, at ForexAnalytix, ForexAnaly, okay? A little twist on analytics.
I just typed it, Dale, for everybody.
Oh, you typed it? Okay.
Yeah, yeah.
Okay, thanks, buddy. And then I have one more. I just have one more announcement, and you know the details aren't complete, but I recall a couple of members asking if they could get into Blake's Trader Lounge. They have a lot of velvet seating in there and screens all over the wall. I'm kidding, it's an online group. And there are details to come, but Blake has decided, because a lot of members would like to be part of it, he's going to open it up. So stand by for, you know, being in a club, you know, so the guys that are in there with Blake are people he collaborates with, that shares ideas. It goes on all day, and it's going to be available for members. So I think that's pretty cool. There is not a bar in there, no bar, okay, because we can't drink in the lounge during market hours, and since we trade FX, it's 24 hours a day. The only time you could drink in the lounge is Sunday. Okay, that's the rule, only on Sunday. All right, Steve. Those are all the announcements. Or Blake. Maybe
Hey,
Blake's got.
Good morning. Yeah.
I'm here, but I think Blake.
Okay. Hey, Blake, do you have a picture of the T-shirts?
I do. Because I heard you talking about it, so I figured I'd pull it up really quick.
Yeah.
I have it on my phone because this was taken on my. It was taken on the bed in the master bedroom.
Look at that.
In my bed. So yeah, those are the shirts. No FOMO, and this is a conversation starter. I actually wore mine to the gym yesterday, and I had somebody go, you know, what does FOMO mean?
Yeah.
but we have Chief Risk Manager and then no FOMO. So they're new. They're for those of you that and there's a very limited few that have the original ForexAnalytix shirts. They are like the nicest quality shirts. I mean, I'm not exaggerating. Well, let me put it to you this way. When I ordered them, it took 2 months to get them because they were on back order so much. So they're like this. Yeah, they're like this black cotton, but it's like the most comfortable, almost like you could. It's airy, you know. I can't even explain it. It's like the coolest T-shirt in the world. They're not cheap. I
don't know about you, Blake. I wore and washed mine like 100 times, and they're still like the day I got them, actually.
Yeah. So they're exactly like those dark gray ones that you have, Steve. But they're black, obviously, and they're just really cool. So yeah. So we'll have I'll give the shirt to whoever the winner is. So to rehash it, if you tweet ForexAnalytix, the Twitter handle, between now and next Tuesday at the end of this webinar. So let's see, that would be the 5th. It'd be the 5th, right at the end of this webinar. And after that, the cutoff time. So Dale will give you warning on Tuesday, like this is your last, chance to tweet ForexAnalytix and get in your numbers, then you have to pick the close of the euro for the 8th, Friday the 8th, and the closing price is going to be Bloomberg's closing price. Because since we all have different, data feeds, we're just using Bloomberg as our standard, if that makes sense. So again, you just, between now and then, you got to pick what whoever's the closest to the euro dollar closing price for next Friday, you'll be a winner of one of these shirts. So there you go.
Cool, Blake. You want to talk about the Traders Lounge being open to the members at all?
Yeah, we have I've had, or I say we, a few of us have had a private room that kept for the, ever since I left Wise Trade, and just it's private and it's been invite only, and we're going to open it up to traders. Couple things. If there's going to be a couple stipulations. If you purchase a semi-annual or annual subscription, you can be involved in the room. Or if you've been a ForexAnalytix member on a monthly basis for more than 6 months, you can be in the room as well with us. And so we're going to open that up here in the next couple of weeks. So it's pretty exciting for those of you guys and gals that are looking for a good chat room, because these guys and gals that I chat with currently every day, we are all, everybody's very chatty, and we've been talking to each other for some of us for many years, and it's a great community. So,
cool.
Yeah.
Are people there 24/7, or what's kind of the hours?
Yeah, there are. I mean, it's 24/7. I mean, it is literally 24/7. But I mean, obviously Asian time zones, and remember, it's just a very select few of people. So there's probably like, right now there's probably like 6 or 7 people that chat, in Asia, and because we only have like 30 people in this room, and but when I open it up to, we open it up to everybody, there's obviously going to be a lot of people in there. And then throughout the day, there's, during not today and not the summer months, but usually there's 20 to 30 of us just chatting away throughout the course of the day. So and I'm there every day that I'm here. So it's a really good place to be, and I think you guys are going to really enjoy it. And the traders in there are all great guys and gals that we've, like I said, we've been chatting for years, and it's all about the markets. We don't we chit chat about other stuff when the market's slow, but when the market's hopping, everybody's dug in and posting charts and talking, and it's great. So anyway, it's
sounds like a great place for intelligence gathering, man.
It is on top of stuff that we do on a daily basis, and analysis that you see on ForexAnalytix. It's a great way to share ideas, because we can't see everything, and so it's having all these eyeballs at once in one community. So it's great, and I think you guys are going to enjoy it. So again, if you're going to have to be a member with a semi-annual or annual subscription, then you'll automatically be entitled. But if you've been a ForexAnalytix subscriber for more than 6 months on a monthly basis, you're automatically going to be able to get in, because we have a lot of subscribers that have been using us for the last year plus, and so we don't want to exclude those folks either that are on a month-to-month basis. Obviously, our annual and our semi-annual subscriptions are discounted aggressively, for folks. So anyway,
Ziggy wants to know if you still have gold toilets.
We don't have? I know. There's a story, and I don't want to get into too much detail, but a company that I'd worked for in the past almost went bankrupt because the CEO put gold toilets in. I say that's not because the CEO put gold toilets in his own private bathroom in his office, but you can imagine the lavish amenities and money that was spent. And so we, you know, I've always been in the anti-gold. I'm anti. Yeah, you know, we try to be very conservative, and you know, always save for a rainy day, and that's how companies survive. But you know, I don't. The last thing I would ever do is put gold fixtures, like real gold fixtures, in my.
From what I understand, Blake, you were employed by Trump at some point, right?
That sounds like yeah, Trump has.
Yeah.
Blake was making $900 a month while the guy put in gold toilets.
No comment. Anyway, hey, so I gotta talk about one thing really quick. I'm so irritated. I did a PIP yesterday with the U.S. dollar Mexican peso, and you know, I was expecting this channel support to hold right here, and I put it in right there, and I put in the invalidation point because this is a trend line retest. You know, it was a trend line of the channel retest. You can see this big channel is retesting here, and during the rollover, because our data feed provider, there was a gap, and it closed it out literally on this little gap, and then you can see where the peso is. It worked out the way I'd anticipated. It got obviously dangerously close to the invalidation point and triggered, but and there's nothing we can do about that. It is what it is. It's so irritating because the U.S. dollar Mexican peso did what I thought it was going to do. It just did it in a little bit more aggressive fashion yesterday afternoon. So irritated about all that. But a couple of things that I want to talk about this morning is you got to take a real quick look at the euro dollar. The euro dollar is under a lot of pressure here. You know, we posted some big reversal candles in the dollar 2 days ago. I mean, if you look at you know the you know, candlestick analysis from a couple of days ago, the euro dollar posted a shooting star reversal candle at key resistance. That was 2 days ago. Yesterday, a Marubozu candle reversal yesterday, and then we're down today. I mean, this has been a real clean reversal in the euro, and the euro dollar is, as I've, you know, been looking at it, I mean, you know, we're probably going to test 118, maybe 117.75 before today's over, and maybe even test this trend line down here ahead of NFP. So this is some really big reversals that we're seeing in the dollar right now, and you know, ahead of non-farm payroll. It's a pretty big development. But there's other, like if you look at the euro pound. The euro pound is closing in on some pretty key support. I'm short some euro pound right now, and I'm expecting it to move lower and eventually break, because you know, there's ongoing Brexit negotiations, but everybody's pretty clear that, you know, of what's happening. The market is extremely long euros and short pound, so the potential for reversal here is quite high. You know, we break new lows on the day, and I'm actually going to be adding. I'm long the pound New Zealand from overnight. You can see we're squeezing past some resistance here in the 38% retracement. There's some resistance, and you know, we've already spiked up towards 181, and I think we're going probably closer to like 183, 185 in the coming weeks. I say weeks, but we can actually be there in the coming days, you know, if it really, you know, starts to move. But that's something else that, you know, I'm trading right now to the long side. And I've been long the Aussie New Zealand, and I closed it out overnight in the 20s. But I want to point this out, that this is such a massive breakout here. We could realistically be trading at 114 in the coming weeks if the Kiwi, you know, continues to get hit. And the New Zealand dollar has a big head and shoulder pattern, so that's all you know, the New Zealand dollar just looks kind of weak across the board. A couple other things, and we got data coming out, is I was long the dollar Canadian yesterday, made some really good money long the dollar Canadian. We had this double bottom. We had this, we had a pip pattern in play moving, and that has been you know, rallying. We've just hit the 618 retracement here. We had a nice double bottom. We have Canadian data coming out here momentarily. We have some, I think the more important data, even though we have Canadian GDP, we have inflation data coming out. And the inflation data, you know, the PCE and the personal spending and income, that's going to have to be watched very carefully today, and that is coming out in fairly short order, so which we'll be covering. And one of the things that I tell you, this dollar yen has been extremely strong. We're at the 38% retracement right here, and I've strongly, well, actually, let me take that back. I've shorted the dollar yen this morning at like 110.58. I closed it at like 110.56. I'm very nervous about, so what I'm trying to tell you is I'm shorting the New Zealand or the US dollar Japanese yen, but I'm so incredibly cautious about it because it's been such a massive move. This has been a huge squeeze that I'm not willing to stick around at this point. I want to see a real key reversal in the dollar to do that. And for those of you that are not watching, the dollar index has broken this downtrend line. So the dollar index actually looks quite stout. Now, one of the other thing that we got to watch today, because we got this dollar index that's squeezing, is we've got gold, and gold tested pretty key support overnight, but there was a big spike in Asia. It was ridiculous. I mean, it was 1 minute. Stopped, bunch of people, reversed. Yeah, you can see a big.
Because they wanted to buy it down there. They flush it so they could buy it.
Exactly. You know, for those people that had bids at 1300, which was the breakout point, that was the smart play. You know, and that play worked out well for people that were buying. But for longs, they got flushed out, and now, but gold still looks constructive. So, you know, I'm torn here. You know, you got gold that still looks like it could bounce today, especially if the inflation data is strong. Because you know that news earlier today about the ECB. Here, let me go over to the, and we got just a couple of minutes. There's news from the ECB says. Euro concerns increased chance of delay in QE decision or a more gradual exit from asset purchases. That comes from sources. Strong euro is worrying a growing number of ECB policymakers. You know, basically as jawboning of the euro. But the fact of the matter is if the ECB looks at the euro and says it's way too strong, we can't afford a 125 exchange rate. So we are, you know, maybe we will postpone. You know, paring back on asset purchases, that's inflationary. You know, between that and, you know, Hurricane Harvey, you know, that came through, that's very inflationary. So, you know, does gold continue to rally on that? And again, you know, so does the euro sell off and the dollar strengthen? So this is the same quagmire that we had yesterday. So do we have a strong dollar and strong gold at the same time? Look at the dollar right now and then look at gold. Gold hasn't really pulled back. So it's interesting to see the dollar and gold move higher at the same time. And I don't know if one or the other is going to win, or maybe they both just continue to go up. I don't know. But I will tell you, gold has respected at this point pretty key support, and the dollar is looking like it's you know, tradable bounce to the upside. So you know, I'm sitting here, you know, a little perplexed. That's why I'm trading crosses. That's why I'm and plus with non-farm payroll tomorrow, this is the end of the month today. All right, so this is the last day of the month. You got end of the month. You got non-farm payroll tomorrow. I'm not really too sure what to do with the dollar, so therefore I'm kind of staying away from the dollar. I think if the euro drops to 117.75 today, I might be a buyer, but that other than that, we'll see. But we have data coming out right now. Let me get over to the dollar yen, and let's see if the dollar yen is a positive response to this. And we also have Canadian data, so we'll look at the CAD here very shortly as well and see how the Canadian is responding. So, whoa, look at the dollar Canadian. Oh my. Dollar Canadian just slumped.
Initial jobless claims exactly as expected, Blake. I mean, 2K difference, 236 versus 238. So it's
yeah. Okay, so that's why the dollar didn't move. But look, yeah, the dollar yen's just kind of sitting there. But look at
GDP second quarter for Canada expected 3.7. So it's a huge bit.
Look at CAD yen. Right. CAD yen, guys, and it was struggling to retrace.
Now the Canadian just buckled under some pressure here. The question is, if people look at the Canadian data and say, well, that's rear view looking, rear view, that's looking through the, blah, that's. I can't even talk this morning. This is what happens when you get just a few hours of sleep. So so if it's rear view looking, and so it'll be interesting to see how the Canadian responds here. But the Canadian is weak at the moment, and we are approaching lows. I actually have a bid in the dollar Canadian to buy it at 152.50. Maybe we'll get there. Who knows?
4.5% annualized growth is something that you very rarely see in today's environment in developed economies, to be honest. I mean, that was a huge print, huge print.
Yeah. Yeah, very, very, very big, very big. Yeah, so like I said, maybe the market might say, well, that's backward looking. Next month is gonna, or next quarter is gonna be not so good, and who knows? But the dollar Canadian might slump down to support here, and the 125.50 level is gonna be huge support for the pair. Now look at inflation. The personal incomes are rising. PCE came in line. And gold, where did I go with gold? Here's gold. Gold's actually firm. Gold's actually at highs of the day. I mean, look at gold could start rallying. Now, remember, it stopped out a bunch of people earlier. It may really start to take off here in gold. So got to keep an eye on gold. Let's see, the euro is seeing a little bit of a bounce. Oh wow,
look at gold. Look at gold.
Wow, gold is ripping.
Ripping $3 within 2 seconds.
Wow. Gold just took off. Wow. My goodness.
That's why they flushed it.
They did. They flushed it to buy it, man. They really did. Wow. Here, let me get over to gold. I'm sorry, I was looking at it through my other screen. So let's get over here. And yeah, like I said, pretty inflationary data. I think they squeezed out a lot of people last night. So now you're seeing the gold really take off. Interesting price action today. And the dollar yen's under pressure. And actually, if you look at the Nikkei is also, oops. There we go. Wait, where? There it is. JPN 225. That's actually starting to break a little lower right now. So keep an eye on that. And with that being said, Steve, I think I'm going to pass it over to you, buddy. Steve might have just stepped away for a second. So
no,
before
mate,
I pass it over,
I'm here. Sorry, my mistake. I thought I was unmuted, but I wasn't. I was talking to myself.
Okay, that happens. I think you do that more often than you know.
Oh, okay.
All right, Steve. Okay, I'm going to pass it over to you, and
okay, mate. Enjoy. Make it killing.
Bye
bye.
Thanks.
Bye. Okay, this is Nikkei, by the way, that Blake was looking at. Because I was more or less looking at the same thing. I was looking at the Nikkei because, listen, I'm going to start with, are you here, Dale, by the way?
Yes.
Or you're making breakfast again?
Yeah. Just flipping the eggs, buddy. Go ahead.
Okay, so you know, Nikkei is testing once again, you know, an important zone that we had. I have to say that DAX is also nicely beat the last couple of days, but of course, you know, we're still not above the channel. But what has already, you know, pressed above the channel is the SPX and the Nasdaq. Okay, so both of these indices at the moment look like you know, they want to go for new highs. I mean, we said plenty of times that, you know, as long as this like consolidation channel holds, you know, you can treat it as a bull flag. In which case, for example, you know, 2,510 seems like an achievable target, especially, you know, if the political and geopolitical jitters like calm down for a little bit. As it seems, you know, we've been in a good risk-on mode the past couple of days. Obviously, the DAX, as I've said, is going to also be helped by, you know, the euro weakness that we're seeing, because that was definitely hurting the index. Now, having to do with the euro, nothing has changed. If you remember, we were looking, you know, after this very nice evening star formation, you know, we were looking for a correction to begin with on the channel, and then we can, you know, we can see for lower targets, but to begin with on the channel. And you know, as it seems that's underway. And another very interesting development we had yesterday, we had talked about it plenty of times as well. Blake beat me to the pattern in play there. Is that we actually got this head and shoulders formation, you know, finally triggering, because we had been monitoring it. Yeah, we had been monitoring since we were there, and even when we got this 2-day rebound, you know, I had written in the analysis that as long as we hold below, you know, the high of this shoulder, you know, the possibility of turning lower and triggering this formation is always, you know, is always a possibility, and it's the main possibility. So currently, this provides, you know, a huge measured target. Of course, that doesn't mean that we're going to hit it, but you know, this provides a huge measured target of roughly the lows. Actually, it targets the lows once again. So if this head and shoulders plays out, you know, to its target, it should take us to 0.6850. Okay, which was this lows that we had here. Or otherwise, if you want to see it like that, once again at the bottom of this broken channel support. So you know, this is a huge development for the Kiwi. The Aussie isn't yet playing ball with it, and that's one of the reasons that we've been seeing this you know, very nice bid on the Aussie Kiwi. You know, for me, a close above, as we said yesterday, 110.18 is going to give us confirmation. Blake has a target of 114. I'm a little bit more conservative. I had been looking for 113 as long as we close above there. But okay, in one case it's 300 pips, in the other case it's 400 pips. You know, it's still a very nice target to have. So yeah, today most likely is going to give us, you know, a daily close confirmation on that as well. So you know, things have been moving. And you know, we can go through questions. Euro pound, I know that Blake mentioned it. I'm totally with him. I shorted it yesterday as I promised. I'm short since 92.35, 0.9235. Today's rejection after you know, an attempt to move higher is very nice. I like it very much. I mean, it gives me extra confirmation because, you know, some strength that we had you know, met selling interest immediately. So, you know, at least a push towards the bottom of the channel is going to be, you know, more likely than not. I mean, you know, we had everything we need here. It was very overbought. We had you know, we had some confluences, and this seems to be working quite nicely. On the other hand, the break of the Kiwis head and shoulders formation is creating a lot of headwinds for the Euro Kiwi. So, you know, we made an attempt to move higher today. Earlier, we retested the channel. We also almost perfectly tested. If you remember, I said yesterday that one of my confluences was the wave 1 equals wave 5, which you know, which came at 166.60. So we plug tagged that today. My stop loss is higher. I have to tell you, you know, that this price action is a little bit concerning, but you know, I had a specific plan with the trade, so I'm sticking with it. As always, you know, when you're trading against the trend, even when you have confluences, you know, the likelihood of you being right is at best going to be like 50-50. That's why you always need, when you're trading counter trend, you know, appealing reward to risk ratios like 2-to-1, 3-to-1, 4-to-1, 5-to-1, depending on the situation. So I'm sticking with this trade because, you know, it's still within my plan parameters. You know, so just giving an update with that. Palladium also, because I had talked about it, I'm also short Palladium because, you know, we said yesterday about the you know, Palladium's rejection. So I'm actually just barely in the money actually at the moment. I'm short from 938, and you know, I have a very tight stop loss above the highs here. So you know, this is a first step to go short here. I'm totally okay. If it doesn't work, I'm gonna reshort it, you know, higher. Sometimes it needs 2 or 3 attempts, as we've seen plenty of times. But my target is a lot lower, so you know, I can afford being wrong 2 or 3 times in a row, because you know, I'm chasing like a very high risk reward here. So you know, that's also an update on what I'm looking at on my positions. Obviously, Blake already showed the Canadian after we got the data. And you know, this is a very strong candle we're getting now. That GDP print was extremely strong, and this, you know, depending on how we close today, it keeps up the possibility of first seeing a new low, as I was expecting since the beginning, and then seeing a bigger correction. But you know, let's see how we close today, because if we close below the middle of the previous candle, of yesterday's candle, that's going to be a dark cloud cover, and this is a very bearish signal. On the other hand, you know, USD NOK, I'm quite happy for exiting that and taking the profits, because you know, it tested today actually the 785. Obviously 785, which was this low, is a key level, because if we fail from here, you know, there is obviously the opportunity to resume lower before seeing you know, a rebound higher. So 785. For those of you tracking the USD NOK, I'm flat now. I took my profits, but anybody that has kept their short or whatever, 785 is the level to watch. And if you actually like it to the short side, you know, this is also a nice reward to risk ratio. I mean, being short here against, you know, 785, not exactly 785. Okay, of course you're going to give it some breathing space. So if any of you know, like it for a continuation lower, you know, this is the level to watch.
Are stop hunters interested in your view of CAD yen?
Oh, sure. And actually, I had a quite clear view on CAD yen. I also wrote it in the analysis. Yeah, there it is. And this is my view. I'm seeing this. This as a very nice consolidation pattern. Okay.
I mean, agree.
Yeah, the price.
These are not bad levels with what's happened in Canada to try it here between here and, you know, 88.14 or so.
Yeah, I'm not saying it's going to work, but I can tell you one thing for sure. This price action, which is, as we've said plenty of times, it's overlapping. You know, it's within a clean pattern, etc. For the time being, does not look to me. I mean, we had a strong leg move lower, and this looks like a B at an ABC to me, which you know, would be nice. You know, I also have a very nice target here at 84.70, call it roughly. So
I concur with this.
Yeah,
I really like this one.
Yeah, from a technical perspective, the best pattern would look to me to see a rejection from somewhere here and then one more leg lower towards here before then discussing the possibility of resuming the uptrend. So that's what I'm seeing in yeah. Okay, let's see, because I think we have quite a lot of questions. Let's go through them. Gold is not rallying due to inflationary data. It was Stelio, you're about to say something?
Sorry, yeah, I just wanted to say two things before you carry on. Angela is asking what is meant by guppy. That's sterling yen.
I already answered that on the
You said that, I didn't.
Yeah.
And what about the other one? What the indicators on the left side of the
I answered that on the text as well. They are, yeah, but I answered the text.
When? Ah, okay, fine. Okay, got you. Sorry about that. Sorry.
No problem at all. Their attention levels. The question was about, but you know, it's still, regardless, it's a good opportunity to show it. The question is, what are these in ForexAnalytix, like yellow indications and sometimes the red on the left side of some of the tickers, the active tickers, and the answer is that their attention levels more or less they indicate, you know, volatility. So it can be they can take the color of yellow or the color of red. You know, when we have extreme volatility in you know, in a specific ticker. By the way, since we were talking about metals before, I also want to show copper, because copper is once again banging on the channel resistance. So, you know, I'm looking for copper to correct lower, you know, at some point sooner rather than later. But we still haven't had confirmation. I mean, we only had one black candle, which of course is never enough, since it was, even if you see it, it was even an inside candle. You know, you cannot get signals from inside candles, obviously. Inside candles just, you know, indicate like some momentum loss. They can indicate like market indecision. They're definitely not reversal candles. They can be reversal candles if they get combined with other candles afterwards. Okay, so shorting, for example, copper just because you see like an inside day, you know, is not a plan. And you know, today's candle is very strong, and you know, I'm still monitoring of the ascending channel. But regardless, you have to keep in mind that copper has remained bullish for a big period of time. Okay, after we bottomed out here with this bottoming formation, you know, we had an impulsive run higher, we had a corrective move lower, we're having again an impulsive move higher, and you know, more likely than not, whenever we get this correction, which is going to be, you know, rather soon probably, I'm still expecting that to be a correction, and I'm expecting then one more high. So, you know, as I said when we had this discussion, it's a good idea if you're actually looking to align to yourself with the trend. So I would view any correction, you know, back to any of these consolidation zones like a good opportunity, you know, to be buying into copper. Okay. Now, having to do with gold, Blake already showed that. I mean, gold came back and retested the breakout zone, and that's exactly what we discussed about yesterday. And that's when we actually drew this, that, you know, I said, or the day before yesterday, I don't remember when it was, that, you know, this is not the place to be long gold, but a good opportunity would be to see a retest, you know, of this zone, and then, you know, a move higher. And that's exactly what we did. We came back, we retested the breakout zone, and it's more than obvious that a lot of buying interest was accumulated there. And, you know, we already have a hammer today. So these candles for the time being do not look like reversal candles. I mean, this candle solo could look like that, but with a combination of the candles that followed, you know, gold still looks constructive, and especially given the dollar's reversal and the dollar's recent strength. The fact that gold, since this is gold against the USD, this is not gold against the euro or whatever else, you know, gold shows remarkable resilience here, okay, and you should respect that. The breakout of level of 1300 and the resilience gold shows, despite dollar strength, you know, are elements that you should take into account and, you know, show respect in this breakout. Gold is not rallying due to inflationary data. It was mixed. Gold rallied because bonds popped higher. Wait a second, mate. When bonds pop high, you mean probably DB? You probably mean yields popping higher, right? Sorry, you said bonds popping higher. Yeah, because yields are moving lower. Yeah, you know something. I'm not so convinced with that, because I'll tell you. Let's have a look at the bonds since you mentioned them. Let's have a look at the bonds. You'll see that the past 2 days, okay, the past 3 days actually, I mean, we picked in bonds like 3 days ago, like two days ago. And since bonds have been slightly, I'm not saying that they have reversed, but they have been slightly moving lower. So yields have been slightly moving higher. And, you know, still gold is holding up, you know, quite nicely. Of course, you know, these are very small movements. And yeah, obviously, if we break down in bonds, if we break this this channel in the treasuries and in the bonds, that we have an equivalent, you know, situation. In the bonds, we have an equivalent situation. If we break below the channel and yields start rallying, obviously that's going to be a headwind to gold. But you know, regardless, you know, we have to admit that gold has made a technical break at $1,300, and that technical break is still holding. So from a technical perspective, you know, gold seems constructive at the moment. A close below 1,300 is going to be a totally different story, but we don't have that yet. Let's see other questions. Dow, yes. Let's have a look at the Dow. Dow is not so much of a different story than everything else we saw. Let's have a look at it now. Here it is. It was also within, you know, a corrective channel. We seem to be breaking above it as well. So to be honest, especially, you know, looking at the big picture here, you know, who can call this anything more than an ABC, a simple ABC correction? Especially, you know, yesterday, I mean, the day before yesterday, we had a huge bullish engulfing candle in the Dow, and you know, you cannot dismiss that. And if you want to look at it from another perspective as well, the Dow in both occasions here and here has perfectly held the 50 daily moving average. Okay, so you know, I cannot tell you that I would be short Dow here, because why would I do that, and where would my stop loss be? Of course, your stop loss would be above the highs, but I mean, okay. And what makes you feel that, you know, this move is the beginning of a bigger move lower? It can always be, you know, proof being something like that, but statistically speaking, the chances are a lot higher that this corrective formation is a bull flag and we're heading to new highs than the opposite. You always need to respect the trend, no matter how irrational it is from a fundamental perspective, because obviously valuations are ridiculous at the moment, and you know, in you know, in the upcoming months, year or whatever, we're going to be looking back, and you know, in retrospect, everybody's going to be admitting, you know, that a crash was coming. But until that happens, you need to stick with the trend, or anyhow, you know, refrain from trading against it, unless you have a very good risk-reward ratio and a very nice confluence of resistances telling you, okay, that this is a nice shorting opportunity. But even still, in that case, you have to keep it to minimum expectations. So even when you're, you know, shorting like an overdone move like here, you always need to have minimum expectations. So you always need to be looking at the move to unfold, to prove to be corrective than anything else. CAD may be soon looking to a new rate hike. CAD yen looks good to the upside. Luca, yes, listen, I agree that CAD yen in the medium term looks good to the upside, and I remain constructive in the CAD yen in the medium term simply because this move higher was impulsive. Okay, then we had a correction lower, and this move higher was impulsive. Also, the break of this multi-year down channel was always, you know, extremely significant. So I'm with you. I'm looking for CAD yen more likely than not to hit new highs. But technically speaking, I'm still seeing a very high probability that one more leg lower might unfold first before we get that. So it's a matter of time frame perspective. Okay, I'm not saying I would be short here, because I have been viewing CAD as one of the strong currencies. So this is not a pair I would choose to be short from the yen pairs, to be honest. But technically speaking, I still see the possibility of another leg lower. So I wouldn't choose to be long the CAD yen in the short term. But I agree with you if we're talking about medium term. CHF JPY head and shoulders similar to Kiwi. Okay, I have to be very honest with you. I haven't checked this chart because it was like dead for a very long time. But we can have a look at it together. Yeah, and you're absolutely right, actually. And you're absolutely right. This was a very nice, actually, downtrend. And this was a very nice break higher. I know that you're not talking about this now, but since we opened the chart, let's do some analysis on it very briefly. So, you know, obviously,
looks like there should be one more push. Maybe
okay, and this move, yeah, and this move higher was impulsive. And now what our friend is looking at here, which I see his viewpoint, is this. This is the neckline, and it's very well defined because it's also horizontal. Okay. And this is, let's take the brush here. And this is a shoulder. This is a whip. Butt finger. This is a head. And he's looking at the potential of developing a shoulder here. And
should
then
I talk about the massages that you're going to be giving out in the contest?
What I have to tell you here is that, listen, yes, this looks like an extremely well-behaved head and shoulders formation in the making, but the key word here is in the making. So yes, I agree with you. A break of 112.60 triggers a perfect head and shoulders pattern, but we're not there yet. Okay, so thank you for bringing this into my attention. I'll start paying attention to it. But you know, I would wait for this level to break before committing to that. And then, you know, the trade is the well-known trade that, you know, everybody knows how to, I guess. Okay, let's say it, because, you know, we might have some new traders as well with us. Nothing wrong with that. In this case, what you're going to do is that you're going to take the measure of the head to the neckline, and then you're going to take the breakout level. Let's say it's going to be there, and then you have a measured target, let's say, of 106.60. Your stop loss in this case, your stop loss should be here above the shoulder. Once you have, of course, confirmed. Oh, wait, because I have the magnet which is creating this. Okay. So your stop loss should be above here, above the shoulder, but of course that takes into account that all this happens after we're back in the neckline and we're breaking it. So in this case, you have a measured target from here to there, and a risk from here to there. So just by having a look at it, you can see that your measured target is roughly, in this case, like 3 times your risk, and that's how you should trade this. Okay. And thank you for bringing this into my attention. It's, you know, it's a very clean chart. Okay, let's see more questions. Are you still short the Euro Kiwi? Yes, I covered that. Of course, I am still short. It hasn't hit my invalidation target, and it's still within, you know, my initially defined parameters. So yes, I am. I don't like the fact that the Euro Kiwi has broken the neckline of the head and shoulders, but you know, once I initiate a trade because I had a specific reason, I'm keeping it up. Since the beginning, I know exactly what I'm risking and why I'm risking it. And if this ends up being a losing trade, fine. You know, I consider what I'm risking for every trade I initiate like lost money anyhow. That's how I treat every trade since the point I'm starting it up. And it still has chances of working out. Somebody's asking about the pound. Yeah, pound crosses. Let's have a look at the pound crosses. Pound Aussie and pound Kiwi. I don't have much to say about the pound Kiwi because Blake already showed that, and it has broken above the range we were at. So now it looks, appealing to the upside. On the other hand, the pound Aussie still fails to get much traction. I mean, we had a nice candle yesterday, but as you see, it's still within a descending channel. It also has some RSI divergence, but it doesn't show the momentum, and it hasn't even registered a higher high yet. So pound Aussie still needs price action and strength to convince me. Okay, so I remain unconvinced about pound Aussie. Pound Kiwi, on the other hand, this is the break I was referring to. This is the first time in a very long period that we're actually managing to break above there. The next target is obviously the 81.52, which is a 50% fib. And if you haven't bought the breakout, then a retest of this area will give you a good reward to risk ratio to be looking into being long. Okay, that's it. Let's go to CAD yen inverted head and shoulders may be a big trade. Okay, let me see what you're looking at, Luca. Luca shared this chart with us. Let's have a look at it. Okay, now I'm seeing what you're seeing here.
Yeah.
I agree with you, but we're not there yet, Luca. And you know something? Let me also show you this. What I'm saying does not invalidate that, because what I'm saying is that there is a possibility for another leg lower here and then a push higher. So even if this short-term scenario plays out, still
long-term bullish.
Yeah, still it doesn't break this outlook that you have. Because this is your outlook, correct, my friend? So still this short-term outcome, if it happens like this, does not break the inverted head and shoulders scenario.
Looks like a brazier.
What is the website link? The website link is simply ForexAnalytix.com. Okay.
All right, buddy. I have our guest in the house now.
Oh, you do? Okay.
Yeah. Joseph Barnes.
So sorry for not making it to covering all the questions. When the markets are very active, the time is not enough. But I'm going to read them now, all of them, and we can cover the rest of them with whatever other questions we have tomorrow. So thank you, Dale. Thank you, everybody. And
nice job, Steve. Nice job, buddy.
ForexAnalytix members, of course, all day long, you're getting updates, patterns in play, whatever. So for the rest of you, see you tomorrow.
Okay, buddy. I'm looking for. I see you, Joseph. I'm making you the presenter now. Looking forward to hearing your voice, and possibly you're going to use a screen share to show us some of the things that you do. Thank you for taking the time to join us in face today and address our community. Are you there, Joseph?
Yes, I am.
Hi, Joseph. Thank you so much for joining us today.
You're welcome.
I refresh my memory. Have I interviewed you before?
Yes, you have.
Okay, that was I thought I had on FX Street. So thank you for having the open mind to come back and be interviewed by me after going through it one time.
Well,
So I appreciate when guests are willing to return. Did you want to share your screen with us, Joseph? Or just talk about it?
Okay.
So there's a screen share option. Maybe you have some charts, and while you're doing that, you could follow Joseph at Joseph_Parnes, P-A-R-N-E-S. Okay, and you could also follow him at Technomart, which is the name of your newsletter. So are you trying?
Technomart, yeah. Let me, not that I want to correct you, the newsletter is Shortex.
Okay.
Technomart is the parent company of managing money or registered investment advisors.
Okay, all right. Thanks for clarifying that, Joseph. And Shortex, I read you recommend 7 shorts, 7 longs based upon what you see technically.
That's correct.
Correct? Okay, so did you bring any charts or anything for us to look at, or you just want to do an audio interview?
No, I have selected 2 short positions and 2 long positions, which is predominantly our well-known companies, and I thought I could go through them for you.
You know, I'm waiting for you to share your screen so we could see it. A picture speaks 1,000 words. So did you see the screen share option when I made you the presenter?
Yes, I did.
Oh, so you click on it.
And let's see.
You click on it and then it'll ask you which screen you want to show.
Which one? Which one?
Look on that. That's it. Look on there.
Okay. Show my screen.
That's it.
There you go. All right, beautiful. All right, so I'm looking at Chipotle. Joseph, I noticed that you started the company in 1979, which was an interesting year. That's the year Russia invaded Afghanistan and gold went to 880 for a 20-year high, and Russia went in, and it was the beginning of the end of their empire, and I don't think they were there as long as we've been there. So, you know, learn from history, right? So we're looking at Chipotle here, and we know that we had that, you know, we had food poisoning issues that started last year, and the stock really got pummeled. So what are you seeing here? What do you tell your subscribers?
I wanted for the audience to sort of digest our strategy of the short selling. Most of the traders and HFPs, high frequency traders, they normally short stocks on a short-term basis. And majority of them, at the end of the year, they come out very, very few gains on the grounds that it really becomes a form of the gambling. Our method of the short selling is based on the new ideas of what we call 1-30-30, meaning we select a position that we think that the stock's growth rate fundamentally has a slowdown or is in a declining mode, and that the numbers of the PEs that was adjusted to it, it will be in a falling mode. For that reason, we do not sell shorts with the idea of covering it with the 10% or 20%. Rather, we would like to maintain short position just like long positions with sustainability of decline in PEs for many quarters. CMG is a very good example.
So what does 1-30-30 mean? What do those numbers mean?
1-30 means, let's assume just 1,000 shares of Chipotle is sold. You get the proceeds from it. The proceeds, you put it into long position of the stocks that they have relative strengths higher than 75, and that they have a growth rate of their incomes and revenue as well within the 20 to 30% that could be sustainable for approximately 8 quarters. So the money that you make on the long side will pay for the cost of the maintaining the short positions and paying a fee to the lender. And you can hold on to these short positions regardless of the fluctuations, meaning if it goes against you, you do not put a stop loss. Rather, you will increase your positions as you go forward till that time comes that the decline starts. And when the decline starts in that particular stocks, it will be very fierce, and it would be below the 50 and 200-day moving averages, and will continue to a point that your PE ratio at that time will match its peers. Then you will cover the position. So in the case of this Chipotle, we started shorting it in 2015, and in it, around 500 or 600 at that time, and he went against us. We kept on shorting it around 700, and we maintained the short. So all the fluctuations regarding the advocates coming in and to bring the price back up from 300 back to 400, we still maintain that short position, and we still are. Right now it's reaching close to 315. It just did below 299, and we feel strongly that this stock eventually its PE ratios will fall from the current 70 to 100 down to perhaps 25 to 30, which is possibility for it to reach 199. That's the time we'll cover it.
Interesting. So it's really a combination of fundamentals and technicals. So you talked about the moving averages, but you're also talking PEs, and you look for PEs that aren't justified, and then your trigger is the technicals. Is that correct?
Another factor, the inflow. The inflow in the stock, the short positions. Most managers, they would like to have their positions and their performance look good. So therefore, at the end of the month, they would like to put in something in their positions that it will look fantastic to the audience or to the clients. So the money that we sold short on Chipotle, we put it into the FANGs, Amazon, Facebook, Google, Netflix, and even Apple. So therefore, on the side of the leg that is a long positions, they have already made the money enormously to cover any adverse effect. And one other things, we hesitate to short companies that would have potential for being taken over, or they're going to have a possibility of the splits, even though that sometimes the splits would mean not very much to us, because that would be culminations of a stock reaching its heights. Once they become splitted, normally the stock starts to dissipate from the anticipations before for the stick price. But it's very important to follow the short positions, and especially if the short positions of this kind of stocks are enormously outweighs the flow. That means that would be another buying power into these short positions that could really challenge our strategy. So that's the reason why, for example, we will not short Amazon, we will not short Facebook, we will not short Tesla, because the short position there
are too large. You don't want a lot of company when you're shorting something.
That's correct.
Okay, so you know Tesla is one of the favorite short selling targets, and you know, intermittently they have some success. But let me ask you this: you're a veteran, and you've seen all kinds of markets. Is there anything that you're seeing through your screens that are saying that this market might be getting tired, perhaps more short selling candidates than long opportunities?
Well, our view of the market is really based on earnings. Granted that you will have fluctuations in the market, short sell-off because of the political, geopolitical, and so on. Today's market has changed dramatically than what it was 20 years ago. We are now global. Maybe 20 years ago, you do remember, numbers of exchanges around the world were really a handful. New York Stock Exchange, Hong Kong, London, and a few others here and there. But today, you have nearly over 25 or perhaps 30 exchanges before. I do recall that in 2011, I was invited in London by Bank of England to appear before FMLC, before the Supreme Court of the United Kingdom, to explain the procedure of the short selling and presenting our viewpoints of not putting legislatures against the short sellers. And one of the subjects that I raised was, if you decide to put a legislature in United Kingdoms, all the exchanges have to do, take their computers and go to Timbuktu and start trading. So that's the kind of a market we are today. We are global. Basically, I view the market in what I call triple E's: earnings, earnings, earnings. You have Dow Jones averages. There are 30 companies. These 30 companies, if you take their average, weighted average earnings, As of this Monday, it came out to 1,222. Since we are in a growth mode, globally speaking, if you give it a 19 times earnings, that means Dow Jones averages could reach 23,000 plus. If you apply the same technique to S&P 500, which combines sectors of the petroleum, of the various financials and technology and so on, the weighted average earnings is between 132 to 145. And I have obtained 138, and you apply 19 times earning against it, you will get 2,600 plus. That's the dilemma that I normally put forward to advise my clients that this bull market is not over yet. You may see challenges of the political as a whole, but the whole world has changed. China has become a second economy. Therefore, in their minds, they are not willing to lose all that wealth that they have accumulated, not just for their economy of their own, but also others surrounding them, to jeopardize that to get into a war and situation. However, the markets as a whole has gone up nearly 20% since the election of our President Trump. So that has Trump's election has brought in a tremendous power to the market on the basis that there will be no more regulations are written up as previous administration has done, and has brought in some confidence to a point that the corporations are spending money. They are doing it on a capital X, or they're buying their shares, and their coffers are much better situated than they were in 20 years ago. So for that reason, I don't see yet that the market will be in a free fall to adopt you or to invite you to short any kind of the stocks that you see on the screen.
Okay. Is there anything you brought? So this was your short candidate. I'd be interested in seeing what you like on the long side here in this environment.
Well, I kind of favor companies on the long side that they have a growth rate that they have able to at least provide a tremendous market share for their products, and they normally trade above the 50 and 200-day moving averages. And their fluctuations, or what I call corrections or retractions, may fall below those two lines, but the basis, or the percentage of the fall has to be calculated on the basis of the price of the stocks. In other words, if Amazon's is trading as high as 1,080 and then requires some sort of a correction or retractions, that it has room enough to go perhaps between 200, 180 or 180 to 210 points in order to have the first support of its extractions. To get out of those prices, it would be very difficult to get back in. Most of the traders have experienced that. For example, once they get out of the high multiple stocks, such as Amazon, for example, they would never be able to get back in with the same amount of the money that they had invested in to be able to maximize their profit. For example, if you had Amazons, like I have had in my clients since almost when it was $300, and I advise every one of them to take advantage of the retractions, add to the positions, because if you would have sold it at $300 and it went up to 180, on the way being coming back up, it would make it very difficult, risk tolerance wise, to be able to retain and hold it for a longer term and benefit from it. Because once you bought it, let's say for example at 400, and then it went down to 300, you will sell it, and you cannot hold it. So therefore, I would like to see the listeners to adopt corporations and companies that they do have a tremendous growth rate and is being accumulated by the mutual funds, by the institutions and others, just to put it on their books to show to their audiences again that they have this kind of a stocks in their portfolio. So therefore, my really the FANG stocks, as they're calling it, now has expanded into the Apple and Microsoft as well. I think are my favorites, and I believe that they have room enough to go much higher regarding of any retractions in the market.
Okay, I have a question. I don't know if it's a relative. It's from Eric Parnes. Can you further discuss why you have continued to short CMG? as I follow him on Twitter, and he seems to have shorted it for years versus getting out, getting in and getting out.
I don't. Two reasons. If I buy it back, I'll have to sell something. I have to sell something that money that I have put on the long side is already making money for my clients. And I don't see any reason to dispose of that money. Secondly, I see CMG, the PE ratio has not abated yet. I like to see it somewhere between 30 and 40 times. That's when I will cover the short.
Okay, I hope that answered your question. And do you look at any sectors? You know, a lot of people, there was a huge move in mining shares, and material stocks have really come to life as of late, and energy stocks still seem to be in the doldrums. Anything in the commodity arena of interest to you on either the long or the short side?
The commodities are very difficult to master in their pattern of the earnings. Most of those buyers, as I seeing it on my screen as well, are mostly short terms. I don't see any recovery for the commodities because of one big element. The United States has become now an exporter and producer of oil, which has changed the equations in the past since 2011 and 2012. We were producing close to 3.5 million barrels a day. Today, we're approximately getting close to 9.5 million barrels a day. Granted, other parts of the world, the producers have exhausted extremely. They've produced so much that the supplies is already not being debated at all and not being abated at all. And the supply-demand side leads me to believe that the commodities, especially in the field of the energy, are really doldrum and is not a vehicle for maximizing the portfolio as we do in the near future. Now, the prices of the metals or material, as you indicated, they're all subject to the China's growth rate. Once the Chinese PMI increases, normally the traders and the HFP peoples, they anticipate price increases. That's what you're seeing it right now, the likes of the Rio Tinto or a BHP or so on and so on. Most of these increases, I think they have already been in the market. To increase any position on those is not a very good idea. I do see.
Go ahead, Joe. Go ahead. Well, you know, our bailiwick is the dollar, and I think it's a linchpin. And you know, it seems to me that when the dollar is weak, the multinationals have a tailwind, and the domestic shares like the Russell, which has been underperforming the market, have more trouble. Does the dollar and its rise and fall play into your analysis at all?
Oh, absolutely. When the dollar rises, it would make much more our goods and services more expensive to the outsiders. So therefore, as the dollar falls right now, it's putting that's one of the I was telling to a lot of my clients, you know, regarding Trump's positions. When Trump came into power, one of the idea was to challenge the dollar side, or at least his argument was that the currencies of the other countries, including China, was extremely high, that he was manipulated. But really, he got his wish, because right now, if you look on, all of the other currencies have come up to their pars or have increased, and they have made the dollar down, and they have made our exports much higher. And it recently was reflected on the GDP a couple of days ago when it came out. That was not even with any additional factors increases into it. It's around 3%. So for that reason, the dollar is a very, very important. And I think even right now you can see with the episode that we have with the Hurricane Harvey affecting all of the nearly 15% of the oil productions, or perhaps gasoline productions, or other refineries included, is not affecting the price of the oil totally, globally speaking, because
no, just the gasoline market, just mainly the gasoline market.
Well, gasoline market is different because that's depends on
Right.
the supply.
Because you need refineries to refine the oil.
That's
Let me ask you about interest rates, Joseph. You have a view on the bond market, a view on the Fed. You know, a lot of people have been saying the bond market's the biggest bubble in history, and people that have been trying to short the bonds up until recently have had no success. You have a view on what's happening in the Treasury arena?
Oh, absolutely. I think that's one of the elements that, globally speaking, we are having an uptrend in the stock markets. Europeans, Asians, and of course us. The reason being that, globally speaking, interest rates as being a cost of money has not been increased, and the view of the very Europeans and, globally speaking, others is that the extent of seeing these interest rates to go up is going to be not 1 year or 2 years, it's perhaps 3 or 5 years. Of course, anything can happen. I mean, anything could increase these positions. But right now, it is not a vehicle to make money as they did before. And the interest rates low, as you have noticed it, is making the cost of money for the corporations lower. So therefore, that beefs up the bottom line. That's one of the vehicles that the markets throughout the world are going higher, and the investors are willing to pay a higher multiples for the companies that are being listed on their stock exchanges.
In other words, Tina, there is no alternative.
Well, for the time being, there is. I hate to use the word of the never, because there's no such thing as never in the market. It's always
for sure.
The different format.
Okay, Joseph. So I think we've covered a lot of ground and very insightful views. Would you like to show your website so that people that may be interested in subscribing and following you would know how to find you?
Okay, this is the. Can you see that? That's the short text, not the letter.
I see it.
And I like to, and this is the Technowar Investment Advisors. We have been almost over 30 years in managing money. Mostly, we are independent RIA, and our aim is not merely to increase the wealth. Our aim is to increase the wealth, hopefully in the time frame of 1 to 5 years, in a double digit to triple digit. So we never give our clients any indications how much they're going to get a year or what percentage of the return. Rather, we aim at increasing the wealth during that time. Hopefully, we can make it faster.
What's been your worst drawdown year?
I would say the one that worries me a little bit is a possibility of the Feds sort of reducing their cash, and I know that I have to reduce it, which is around 4 billion or so, quickly. That's what worries me.
Okay, that's a wild card, is reducing the balance sheet, and at what pace that could change the picture according to you. All right, well, you heard this from a veteran, so we have to pay attention to that. And Joe, I want to thank you very much for being here and showing your work, and always great to talk to somebody that's had the kind of experience you have through many different cycles. I wish you and your clients continued success. So thank you very much, Joseph Parnes, at Joseph_Parnes. Check out his letter. And thank you again for your time today, Joe. I'll tweet this interview out later in the day.
Thank you very much. Thank you for having me on.
You're very welcome. That's Joseph Parnes. I'll see everyone tomorrow for the NFP. We'll be here half an hour before the number. And I have Norm Linsky stopping by. He told me he had his best month in stock indexes in quite some time. And he'll be updating us with some turning points. Remember, don't just count your pips, count your blessings. My trading warrior brothers and sisters. And I will see you mañana.
Thank you.
Thank you, Joseph.